Let's get into the 3 best stocks that I'm going to be personally watching and potentially buying in April 2019. Now I'm going to give you guys reasons as to why I would personally invest in each one of these picks, give you kind of my personal entry point that I'm watching, and kind of my overall view of the stock currently. If that sounds interesting to you, then stick around, hit that subscribe button down below because we make a lot more stock related videos on this channel. And also, if you enjoy this, guys, please drop a huge like. It helps the channel out tremendously, and I appreciate each and every one of you that drops that like. Now let's get into the video, and let's get into our first stock pick here, which is another food related stock, which I personally think is very under the radar, even though it's a pretty well-known company, and that's Domino's Pizza. So Domino's is a worldwide pizza chain, and it really caught my attention recently because the stock price did take a hit. That being said though, it's not quite at an entry price for me right now, but I am keeping a very close eye on this in April 2019 because I do think it might get to my entry price at some point in April. Now if you're wondering what price that is, I will go over the charts in a second, which will help me articulate this better. So Domino's Pizza is actually the largest pizza company in the world based on global retail sales, and they just opened their 10,000th store recently. In 2018 alone, they opened 1,058 new stores, 258 being in the US and 800 of them being internationally. And a few weeks ago, they actually reported their earnings, which summed up not only the quarter, but also their fiscal year 2018. So let's start off by taking a look at that to figure out where this company is at right now. So in the US, same-store sales grew by 5.6% in Q4, which equaled a total of 6.6% in fiscal year 2018. International same-store sales grew around 2.4% in Q4, 3.5% for the year, and diluted EPS was up 25.4% to $2.62 for Q4, up 43.2% to $8.35 for fiscal year 2018. So based on these numbers, Domino's Pizza is showing us some growth here, not only with their sales growth in same stores year over year, but also with their profits as well. So now you might be wondering, why did the stock price drop even though they had such good growth here? Well, it didn't really come up to analysts' expectations. So when comparing it to what analysts were expecting, their non-GAAP EPS was $2.62, which missed by 7 cents. Their GAAP EPS was also $2.62, which missed by 8 cents. And their revenue was $1.08 billion, which missed by a measly 10 million. But the problem that we see here is that there were misses across the board. And usually when stocks report their earnings and they have a miss across the board, it usually ends up with a sell-off, and that's exactly what happened here with Domino's Pizza. You can see right when they reported, the stock gapped down and has since been struggling to get back near levels it was prior to earnings. This was also Domino's first miss in the last 4 quarters, so it just added more fuel to the fire and was another reason to sell the stock. But analysts are a bit more optimistic here with Domino's, and they see it going to a share price of $300 per share, or 20% upside within the next 12 months or so. This could signify that analysts actually think that this is just a hiccup in the last quarter, and that the next quarter will continue to beat expectations and continue growing sales. And I think that's a pretty fair thesis. I think that Domino's Pizza has a very strong brand behind it. They have a good product behind it, which is their pizza, of course, and they have worldwide reach where they continue to expand. But my issue with Domino's personally at this exact moment is the valuation. Their PE currently sits at around 30 with a more reasonable forward PE of around 22. But on the plus side, they do pay out a small dividend here of around 1%, so there's kind of a small bonus here for holding the stock. With that being said, I want to look at the charts now to show you exactly where I would personally consider investing in Domino's Pizza. So we can see here on the weekly that it had an exceptional run in 2018 on high expectations, but has since started to correct. We're coming close to the 100 moving average on the weekly, but I still feel with that price and valuation, Domino's Pizza is an expensive stock. Personally, I'm watching the 200 moving average, which coincides with the uptrend support, which happens to be around the $200 price range. I think that this is a level Domino's Pizza will eventually come down to, and if so, I would seriously look into opening up a position in the stock at that point. And just for context here, the monthly shows us how far we've stretched, so a pullback to $200 would be a very healthy move for the stock in my opinion. If for whatever reason next quarter misses, I would expect us to be close to this $200 per share mark again. Now if you're interested to find out if and when I do open up a position in Domino's, make sure to check out the VIP group, link is in the description down below. We do have a sale going on currently, so don't miss out if you're interested in joining. But either way, whether you're interested or not, let's get into our second pick here, which is Tesla. Now this is the second stock that I've been waiting for a while for it to come down in price to actually go in and invest in. Now if you weren't aware, you were living under a rock or something, Tesla actually announced their Model Y last week, and the response was pretty much underwhelming. The stock has really just been selling off since then, and it currently sits at just under $270 per share, and it was $100 higher just a few short months ago. So this is a big correction here in Tesla stock. Now the Model Y won't really be on the road until 2020, but they have started taking deposits, which is a plan for them to help fund current models, which is the Model 3, the Model S, the Model X. This is similar to what Tesla actually did with the Model 3 pre-orders, which they used to fund the production of Model 3 and the production of their other vehicles as well. And honestly, Tesla is not a stock that you just invest in solely based on its valuation. What I like about them compared to NIO, because everyone wants to compare Tesla to NIO here, is that they were first to market, so they have a huge advantage there. They have world-renowned factories with their gigafactories, and they also are pretty diversified with their solar and energy efforts. In fact, Tesla actually accounts for 50% of battery production in the entire world. And really, there's no doubt in my mind that Tesla is here to stay, and Elon Musk has pretty much squashed any sort of bear thesis that the company is going to go bankrupt, the company is not going to survive, no one's going to buy their cars. All those theories were pretty much beaten down by Elon Musk and Tesla. In fact, the Model 3 is the #1 selling electric vehicle in America by a massive margin. No one even comes close to them. Tesla has also pulled off a profit in the last 2 quarters, and looking at this chart here from Hyperchange's charting website, Hypercharts, we can see how just in 4 years they went from barely any revenue and big losses to massive revenue and became profitable as well. And in my opinion, even if the next couple of quarters are losses, Tesla now has a model figured out where they know what they need to do to turn a profit if it comes down to them having to survive. But what Tesla is doing instead right now is reinvesting all of that money back into the business, like with the Model Y for example, and trying to reach as many people as they can, which in my opinion is a very smart move, because over the next couple of years you're going to see a lot of competition come into the space. A lot of other manufacturers have been working on electric cars for the last few years or so. Tesla had a huge head start on that, which is why they have such a huge market share right now. And if they don't keep reinvesting in the business, these other manufacturers will catch up to them, and eventually Tesla will not have as much market share as they do right now. Analysts are again pretty optimistic here with a 20% prediction for upside, and in my opinion this is kind of underestimating Tesla really. I think that once we see Model Y pre-order numbers, whenever that's released, we will see a big pop in the stock. So personally, if I was short in Tesla right now, I'd be looking to exit at these prices of under $270 per share. And really, when you look at the charts for Tesla, everything seems to be coming together here. If we look at the weekly, this is a major support for Tesla on the uptrend support and with the 200 moving average. Every time Tesla has come down to this level before, it has been bought back up on good news. And the monthly chart here shows us that we're at the 50 moving average, which again is a healthy level to pull back to, especially if that level does hold. So unlike my first pick with Domino's Pizza, I do believe that Tesla is currently at a level where I would personally open up a position and continue adding to this position if we did go lower. I personally see a lot more upside in this stock moving forward as opposed to downside. Now guys, we're going to get into our third pick, and if you haven't already, hit that like button down below. Like I said, it helps the channel out a lot and I really do appreciate it. But either way, whether you hit like, dislike, or you're just sitting there and you just choose not to do either one, which, come on, hit the like button. Our third pick for this month is Boeing. And although I don't think Boeing is at a current buy at this price of around $370 per share, I do think it's a stock similar to Domino's that we should keep a close eye on in April 2019, because we may get to our buying point at some point this month. As pressure really continues around this whole 737 MAX issue, I think the sentiment is going to sort of shift here in Boeing. It's had a good run over the last few years, but that might come to an end now, at least for a short period of time. Now, I did make a video a couple days ago outlining the best cases and the worst case scenario for Boeing and what would happen to the stock if either case played out. So if you haven't checked that out already, I'll leave a link up here in the card. Check that out. It is a good video, and it does give you kind of an opposing view whether you're a bull or a bear in the stock. So analysts actually see currently a 20% upside in Boeing, which in my opinion is very likely long term. But short term, I don't think that the turbulence is done quite yet. And you'll see why right here in the technicals, because when we look at the weekly chart in Boeing, we can see that even with this correction, we're only at prices that we were back in January. So the question I've been asked is this a big sale on Boeing stock? Do you think it's a good time to buy Boeing stock? The answer is I don't think so personally. I personally am not buying right now, because my thesis really, and my question I asked back to these people is, if you're bullish right now on Boeing, why didn't you buy Boeing 2 months ago when it was at the same price? It's not like it's corrected down 50% or something like that. It's actually only gone down less than 20%, and like I said, it's only a couple of months gain. So if you didn't buy Boeing back then, it's not really as appealing as a buy right now. And you can see also we're well above our 50, 100, and 200 moving averages, signaling a possible pullback in the stock may be coming soon. I personally would consider entering Boeing closer to a $300 per share price, which would coincide with the 100 moving average here. And you might think, oh, that's not going to happen with Boeing. Boeing's not going to drop below $350 per share, let alone $300 per share. Well, the thing is, the sentiment is slowly changing around the stock. You can see it with the news, you can see it with the analysts, you can see it with the headlines. And when this does happen, we've seen it time and time again. We've seen it in Facebook, we've seen it in Nvidia, we've seen it in Apple, we've seen it in pretty much every massive stock out there. Fund managers will start selling their positions, and that'll add more selling pressure to the stock. As a result, the stock price is most likely going to fall, and that is when I want to come in and scoop up some shares of Boeing. You got to remember that in the short term, the market is very irrational. You have wild price swings, but as a long-term investor, you have an advantage because you can take advantage of when the price drops irrationally, enter a position, and then profit massively over the long term. If you personally believe that Boeing is going to be around for the long term and they're going to keep selling planes, they're going to keep making planes, then yes, it doesn't really matter as to whether you buy Boeing at 370 or 350, because over the long term you're expected to be much higher, and the buy and hold strategy may be the best bet here for this scenario. Now you also got to keep in mind the competition. Airbus, there isn't too much really going on with Airbus. Their backlog, I believe, plenty of years with their planes as well, so it's not really going to be too much of a threat that customers are going to shift over from Boeing to Airbus, because if they want their planes delivered quicker, they're most likely going to go to Boeing. Now personally, if we were at $300 per share right now, I would use the buy and hold strategy. I would probably buy in, and if we drop lower, buy some more. But currently at 370, I'm not interested. But you also got to ask yourself the opposite question. Is it possible that we rebound here and get back around $400 or more per share in the next week or two? It's possible. I mean, if Boeing does come out and solve this issue and it wasn't really a big deal after all, yes, that's a very likely possibility. But in my opinion, that's kind of the risk that you're taking, and that's kind of the risk that you accept if you actually wanted to get into a stock at a price point that you're comfortable with. So guys, if you haven't seen the video of 3 stocks to buy March 2019, those picks are still pretty strong in my opinion. I'll leave a link up here. Make sure to check that out. And I can tell you right now that I am buying at least one of those 3 stocks right now. So thank you so much for the support, guys. I really, truly appreciate it. Hope you enjoyed this video. Don't forget to invest positively, and I'll see you in the next one. Peace.